Good evening. This is the Eye of the Storm podcast for the NASDAQ 100 and the S&P 500 for Sunday, October 30th, 2022. I am going to begin here on the 4-hour chart, and I am going to start with a little bit on the larger picture today. And so that's why I'm doing it as a podcast, because I do have a lot of things that I want to discuss and just kind of talk about what we have going on, what the possibilities are, and how what the market seems to be trying to anticipate could either work out or not work out. So beginning here with the 4-hour chart, I want to just show that we still have the primary A, the primary B, and labeled as intermediate wave 1 of primary wave C. What I want to bring back into the conversation right now would be that second view, which I was pushing away at the start of what felt like we were going to be starting to drop in an intermediate third wave, and that would have been off of that high right there. That did not occur. View number 2 consistently tells us that this is intermediate wave 1, 2, intermediate 3, 1, 2, and then this is intermediate 3. We can count 1, 2, 3, 4, 5, or within, but I have worked it up before. And this would be intermediate wave 3. Putting this into an intermediate fourth wave. Now, if we were to update just that what took place, let's now go down with this in mind and take a look at what we have going on in the hourly chart. And to be honest with you, it would be both. If this is going to be an intermediate third and we're in an intermediate fourth wave, it also could be doing a double ABC structure to finish that correction. It fits cleaner in a wave 2, but it also fits within a wave 4 because the market is in a period of indecision and it doesn't know. And it is getting, whether it's through pundits or wherever the sources are, it is getting what is coming out as sort of mixed signals that the Fed is going to pivot. And of course, the talk is that they will, based on what Canada did and the UK did, and for different reasons. And I don't think that their particular situations can be mirrored to the United States. So leaving that aside, there is some discussion and feeling that the Fed will pivot. Whether it's little, whether it's a lot, the Fed will pivot. Then the other side of that coin is that the Fed will come in stronger because they got to fight because it isn't getting better. So we have both of those out there, and either one or the other is going to come up. We have the Fed meeting starts on Tuesday, and we'll have their result and the decision on Wednesday. We have the employment situation numbers for the month of October on Friday. So we've got a lot of things that could be pointing in a concluding phase coming up with an additional drop there and possible. So let's discuss if indeed this is intermediate wave 3 and we're in an intermediate fourth wave, which actually I did kind of say to somebody I was not banking on it and had dropped the probability. And suddenly it comes back because the NASDAQ has a tendency to just do that. Actually, the markets do. So again, if this is intermediate 1, 2, 3, and this would be 3, 1, 2, and then this subdivides. This is minor 3, 4, and 5. Minor 1 and 2 are up here. Really right there, 1, 2. So in any case, we're inside. So I'm going to drop down to the hourly chart on the NASDAQ. And here we could see again, this would be intermediate 3. In any case, this all remains the same. And what it appears is that this was the earnings. And we came in on Friday and they just absolutely loved it and actually came out and said that Apple's earnings were good. So that produced a lot of that because Apple itself, you can see, was up nearly $11 on Friday. So if we're in a double ABC, here's the first, the intervening 3-wave structure turns into an X wave. That's how it's labeled. We have 3, 3, 5, then 3. So it's ABC, X, and then 3 for A, 3 for B. We're in a 5-wave C, which can actually, now we'll go back, because I want to put the fibs in that would fit if this is a fourth wave. So let's go back out to this. So where we're going to connect our retracements is we're looking at just that what would be counted as the third wave, which is right there. Going back down to the hourly chart and opening it up. We have surpassed and reached on the A wave a 50% retracement for a fourth wave. Can you get a 618 retracement for a fourth wave? You can. And it's very now likely because this is a double ABC. Prior, if we were to call it, then it would have been at the 382 level. So what could force it up there between now and, say, Wednesday? Speculation, short covering, in anticipation of not knowing what it could do. And as the higher the market goes, you force the next one down the line to go, I'll sit it out and I'll wait and re-enter short or change my positions when the news is out. So technically, yes, it can be. The whole pattern has been strange. But what that then allows, going back out to the 4-hour chart, is for a fifth wave down. So we would run fibs from there to there, and that fifth wave would still be expected to drop 95, 9,000, even closer down. It still would be expected to put a good wallop into the market. But then what it might be doing is finishing a primary C wave and that cycle A wave and producing a much larger bounce, which when I read and listen to other analysts are expecting something, possibly not until the end of the year, possibly not until 2023, but expecting a fairly decent relief, quote unquote, rally soon, if not starting by the end of the year, with the much more severe corrective phase coming next year. And that would fit with finishing the primary C wave and putting in that cycle A wave, getting a cycle B wave, which we would expect to put a fairly decent rally in. Now, I'm going to do something that I don't normally do, and that is to go over and I want to take a look at the 30-year bond, that future. And I'm going to go up to the monthly chart on this because I need to look at, we're coming off of the all-time high. So that was the lowest yield, but the highest bond price. And now we have interest rates rising, and we've gone from 192 down to 118, basically, which is a fairly, for a 30-year bond, fairly steep drop. So what could it be? I'm counting it as 1, 2, and then this is either going to be a C wave or it's going to be its own 5, but larger. I'm saying 1, 2, then this is 1, 2, and this is 3. So if I'm looking for a fourth wave here in the bond, in the long end of the curve, 30-year bond, then we run the potential of a rally in the bond, at least getting to 129 to 136. That would satisfy, in my mind, either speculation that the Fed's going to pivot or the Fed actually does slow down. Not conquer inflation, but slows down. We get a big transfer, we get a covering, and we rally in the bond. Now, since I'm already looking for the bottom of cycle wave A and the beginning of a cycle wave B wave, that would fit, and that would propel it. And that would actually provide enough energy to cover a lot of ground to the upside. So going back to the NASDAQ, but timing is everything, right? We have to kind of consider, well, when is all this going to happen? Well, I have to allow the market to tell me, and that's an honest answer, because I have two situations going on here. Now I'm going to take off this fib, and I'm going to go over, I'm going to take a look at the other view, which I'm now leaving as number 1. So view number 1. So what I just did is updated the second view, or my alternate view. But the one that I think is truly could be happening and produce a larger rally is the one that shows that this is intermediate wave 1 and we're still in an intermediate wave 2. So same deal. I'm going to put in retracements. Excuse me. Sometimes the brain just searches for the word and doesn't find it. But now I'm putting in retracements for wave 1. So we have much more upside room under this count for upside, for a continued rally in the markets in the form of an intermediate degree wave 2. So that does exist. Now I'm going to drop back down. And it doesn't necessarily change anything to the other side of the coin in terms of inflation's all taken care of. Interest rates are going to start coming down now, and we're just going to rally. Because in all honesty, I would still be expecting a fairly nasty turn if this is intermediate wave 2, and then we're going to get a turn right out of that. But how high can this get between now and Wednesday? Well, this on Friday, albeit it was expiration and it was a short squeeze, but if they return an apple and decide they're going to push it another $10 or $11, I pretty much am telling you, I think this could be up to 12,112. It'll be heading up here. We have 12,500 and have had those resistance levels for quite some time, to be honest with you. So here they are staring us in the face with a count that can carry it. So if anything we got, 1 of C, 2 of C, 3 of C, 4 of C, maybe 1, 2, and this all going to end up being a third, but we're in a 4 of 3, we're going to get a 5 of 3, and then another pullback and another rally. Could we get here to here? Yeah, depending on what is happening on the outside, what the market's interpretation of things is going to be, where that demand is coming from. And if the demand is to fill the long orders, demand to fill the buyers, they're going to have to go find value where sellers are going to be willing to sell it to them based on what the feel in the market is then. If you got a thought that we can certainly surpass 11,728, we've already been there, and the C wave, I would expect to do just that. We're already up beyond all of that. So I could put one more, and that one would be the extensions. And I'm just going to do it for wave C. So I'm going to go to from the bottom of wave A to the top of wave A to the bottom of wave B. So what we have an overlap at that 382 level. And it goes up to 28, which would put in a new high. And so, yeah, it's not totally, and it would be where wave C is equal to wave A. But here we go. Up here, we have the 1.618, which is where wave C would be 1.618 of wave A, also a common. And that's at 12,213, 214. So we're up there. But that also puts us in the neighborhood and puts us, actually the zone is pretty thick. So whether it can actually garner enough push to get itself up to 12,500 right now, with things being the same, without, if we have Fed momentum being injected in the market, well, yeah. In fact, it could go higher, but I'm not going to that particular view because that's alternate right now. Because first we need data that's going to significantly show that interest rates are going to come down because inflation is sinking, it's retreating, and that allows the Fed to pause. Haven't received that data yet. So please, that's pundit going into saying, well, they will because that's what's going to happen, because somebody's numbers show it. I can feed an algorithm exactly what I want it to come out and say. If this is that, then this. If this is that, then this. Right? It's if-then statements, and they're pretty easy to kind of stick in there and say what you need to say. I'm going to let the market tell me anyway. I'm not going to go on the basis of, well, I think the market's going to go up because of. Again, as a day trader, we play both sides and we happily can buy it if that is the day trend, if that is where the market is headed, if we know from other indicators, along with the Elliott, along with the Fibonacci's. So you shrink it down, which I'm going to do in a moment, and likely over in the S&P. But it would be the equivalent. You do the same methodology here in the NASDAQ as well. So tomorrow, we do have the potential where we're just going to hang out here because the Fed meeting starts on Tuesday. We have a couple of, there's also some numbers coming up, but not the super big ones. Like tomorrow, Chicago PMI comes out at 9:45 a.m. 9:45 Eastern. And so, and it's not super important, but who knows? It could. ISM manufacturing on Tuesday at 10 a.m. is more of a market mover. And then we have the Fed announcement on Wednesday at 2 p.m. So international trade in goods on Thursday, jobless claims on Thursday, pre-market, and then employment situation on Friday, pre-market. So we do gotta, we have enough that could push the market. And again, the employment situation has been sticky. If more people are getting jobs and going to work, and there's less claims, most of us would be like, great, people are going to work. That's great. Everybody's paying their taxes, prices, blah, blah, blah. Not going to happen. It's actually a little bit inflationary, and that defeats the purpose of what the Fed's trying to do. In any case, we do have some numbers. Now, so we have our fibs, we have the potential. If you need to tie something with it, you can. And a lot of it's going to be the Fed, excuse me, on what that action actually is going to be. And we'll know on Wednesday afternoon. Again, I don't see any evidence that's going to change the Fed direction, even to do a 50 basis points versus 75 basis points. And I think that the market, they may think that everybody's going to take it as really great news, but I think they continue to buy it if the Fed only raises it 75 and just remains consistent, because they'll push that narrative out to the next meeting and then do a Santa rally. So you got that going on too. So there's a lot of hype that's going to go swinging around the market. Playing the price action is going to be your best bet, but we do have upside potential remaining. We have where we could tack on 200 tomorrow between now and Tuesday, and then start the next leg down. In this case, either it's going to be a fifth wave, or it's going to be a third wave, both at an intermediate degree. So the turn itself, no matter which count I'm using, would be revealing a stronger downside. We need to get through the next couple of days to begin. I will go down very quickly down to like the 15-minute chart so that we can see beautiful, beautiful rally. It really was extremely, it wasn't as easy as you might want to think, but if you held on, if you just traded accordingly and you could hold the trades, you profited extremely well on Friday. In fact, it just basically was from the opening. That opening round was extremely strong, and you made all your money in the first 6-7 minutes of the market. So in any case, we still have that upside. Going down to the 5-minute, you can start to break it down a little more, and you're opening it up, right? Of course, this is one of C, 2 of C. We've got 3 of C, 4 of C. Maybe we have a 5 of C, and we already have limitations on where that 5 can go. And yes, we can get a decent 5. We can get a 5 that's going to take us 1369. And this is, yeah, that's a 300-point rally. We got a 300-point rally from here. We're up here. So yes, we're up to 1800 plus. And that puts us into a zone where it can complete. So that's how, and then you can tailor your fibs. If you're counting this 1, 2, you figure out where your 2 is, and you go 1, 2, and now you're going to put your 3. It's already gotten past everything. I can tell you just by the size of it that it's gotten past everything. So you've really got to go to the outside and come in here to where you think it's going to go. And for a 5, you're going to have to go from here to wherever this low comes in, and that's going to project much, much higher. So we have a lot of upside potential, and you can do it on a technical fib basis. All right. Now, let me go over to the S&P and let's talk about that. And then we'll be able to close it up for today. Again, the S&P now actually did go up and put a new high in over that A wave. So here as well, I am looking at a double ABC, a minor degree double ABC. And that's why you're going to see that in just a moment. So here we are still AB, primary A, primary B. We're looking at a primary C wave. Yes, I can do the same thing in the S&P. It's not as clean, but if you had to, you could do intermediate 1, 2, and then intermediate 3 here. And so this would be an intermediate 4th wave. Again, where do we put our retracements? We are going to be wave 4 is related to wave 3. So we're going to do it from wave 3. All right, so let me, oh, come on, please. All right, so I'm going to do it from the top of wave 3 down to the bottom. Again, don't pay any attention to the actual labeling because this would be intermediate 3. We look at intermediate 4. Here's the 7.5. So we've gotten up to 618 on a wave 4. And we got 38.78. So it kind of went through that. So this is already telling you, no. Wave 4 cannot overlap wave 1. It is not a diagonal coming off. It is 5, 3, 5. So this is not intermediate wave 3. So that knocks that one right out. It's still alive actually for the NASDAQ, but it doesn't hold as much water. What does hold the water here is we're going to remove this drawing, and now same thing, but we're going to put in this one. And here we have 50%, which we just cruised up to on Friday and are basically sitting just below right now. And that is 50% retracement at 30, what was that? 39.15. Next up would be 4,000. And that's not an unrealistic level, and it's 618. And for an intermediate wave 2, not an unrealistic level at all. So that the S&P still have upside targets? Yes, absolutely. And on this basis, what would a second view be for this particular market? I think I'd have to go out almost to the daily chart and to put into perspective the possibility that coming off that I've got to drop everything by 1 degree. So in other words, that this, instead of being, this would be minor A, B, C for intermediate wave A, this would be intermediate wave B. And now we've finished an intermediate C wave down here because it does count as 5. Now, if this is intermediate wave C and it's primary wave A, then we're just entering into the primary wave B. And I want to tell you, that would allow for a much larger rally now. Is that possible? Yes, because again, we've got a bunch of stuff playing out in the background that we don't know about. I cannot say for 100% certainty what the Fed's going to do. I cannot say for 100% certainty what the market is going to do. I can give you an idea, but if we need to relate a move to what we're seeing and what would cause buyers to just storm in and start taking everything back, that would be one thing. If we get a pivot early, we get a Christmas rally. And so again, Tuesday's November the 1st. So we're there. We're into the last. We're into the end of year type of moves. Could it happen? Sure. But what it does, we're just moving the primary degree out and calling that primary A. We're in the primary B, and we still have a primary C to go. So I'm going back to a very old count, but it now kind of works out because we've gotten some pieces to it. And this, in my mind, even though it did make a new low under there, I would not be calling it primary C. I think that truly would be counting too quickly. But it could be primary wave A And this still could be an ABC. So that's where I'm going to leave that. Right now, though, I'm going to be looking at this as, again, intermediate wave 1. We've got intermediate wave 2 looking to clean up and complete up here, possibly even that high, getting up to this level. And we have a few left in earnings reports. But of course, the big thing, of course, next week, as we've just discussed, is the Fed. So we'll see how it all works out. For tomorrow, I don't really expect a whole lot because of the Fed, other than a continued inching higher. And it could actually be strong. It could just come in and decide they're going to short cover tomorrow. I can't say that that isn't a possibility, because at best, I can say 1, 2, 3, and we get a 4, and we still have a 5. And that would suggest, now whether they do it all tomorrow, they may. So again, upside, strong possibilities. Downside, I see it as corrective, actually, at the moment. I think that we're doing 5 up to complete wave C, the second wave C. So I think there's more upside potential than downside as we wait. And then the anticipation will build as we're going to hear more narrative on, oh, the Fed's going to pivot. So we got a lot. All right, I am going to end it there, but at first let me take this down as far as just tiny intraday analysis. You can see 1, 2, 3, and then we got to get the 4. Once you get the 4, you're going to flip it over and you're going to run it to extensions, and you go from the bottom of 2 to the top of wave 3 down to where 4 completes. That's going to lay out wave 5 for you, and then you see where you get overlap. And I'm sure you're going to have some numbers that are going to at least bring it up to 4,000, maybe even up to 4,083. All right, and then you're going to one more down. You can take it down to that 5-minute, and now you've got cleaner, because you got, oh, look at, there's the A, we get a B, we get a C, and then you can go to retracements. So back to retracements. If you want to take a look at what the potential is for a 4th wave, again, bottom of wave 2 to the top of wave 3. And then you're going to have retracements. 3A2 is going to take you down too deep, but it could happen. All right. I'm going to end it right there, and our next update will be on Monday, October the 31st.